Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 7th of December 2011, and the week so far, well, it's been another very busy and volatile week. The markets continue to struggle to find direction. We had towards the middle of last week coordinated action from a number of key central banks to help boost funding to struggling banks. Now this led to a rally in the equity and equity index markets and a mood of optimism that we could possibly be coming to a solution to the current problems that we have. However, towards the beginning of this week, we had the S&P put all Eurozone countries on negative credit watch, meaning that they could downgrade pretty much all of them. Now, this includes the remaining AAA credit rated countries that include both France as well as Germany. If they were to get downgraded, it would make a bad situation even worse in Europe, and it would make all borrowing costs for all these countries that are already struggling with debt even more difficult to refinance their debt going forward. The most recent example of this has actually been Italy, where Italy's borrowing costs shot up to an unsustainable 8%. They have subsequently fallen back down to about 6% after Italy announced quite an eye-watering round of austerity measures totaling around 30 billion euros. Over the next couple of days or so, starting on Thursday, all eyes will basically be on the EU summit, where we could possibly see a writing of the Maastricht Treaty. Now this would lead to close integration, both political, economic as well as fiscal, among the Eurozone countries, something that both France as well as Germany are saying might be necessary in order to keep the euro going as it currently stands. As I've mentioned in a number of my commentaries before, I don't expect the volatility of the financial markets to change anytime soon. We seem to have political and economic news on a daily basis that seems to be polar to one another, and I don't certainly see that changing, which makes it very difficult to hold on to positions for any meaningful period of time. So looking at the FTSE as it currently stands, it's trading around 55.50. It's down about 16 points in the day so far. The FTSE has broken through the pivotal 5500 level, and I have a chart to show you regarding this. As can be seen, the FTSE is now trading above 5500. Now, the 5500 has been quite a pivotal level both on the upside and downside, and it finds it very difficult to break through this. If it continues above 5500 and remains there, you could possibly see it going up to about 5750. However, if it fails on the upside, we might see it going back down to about 5200, and from there even down to about 5000. The long term certainly seems to be very uncertain at the moment, considering the continuing uncertainty we have. I think it does very much require some sort of solution to the Eurozone crisis before we can find any clear direction on which way to go. The Euro too has been quite topical at the moment for obvious reasons, and I have a chart to show you regarding the Euro. As can be seen, the euro has been in a downtrend since towards the end of October 2011. Now, there are the obvious reasons as to why it has been coming off, which is the Eurozone debt crisis. However, I believe there are a number of other reasons that could also be contributing and could actually lead to a further sell-off in the euro currency. The first is the fact that there is a trend in place, and it is reinforcing, so any people that are trend followers would actually be selling any of the dips that we've had in the euro. The second reason is many people are expecting a cut in the interest rates in the Eurozone on Thursday, and it could possibly be the first of a number of rate cuts. So that's all factoring into the euro as a currency, and in the short term you could possibly see euro hitting a low about 132.00, although many people are possibly eyeing the 130.00 as a bigger, more key and psychological level. Over the next week or so, we have a number of key figures which could certainly move the markets around. The first is both rate decisions from both the Bank of England as well as the European Central Bank tomorrow. Now, the ECB is not expected to actually change its rate. The ECB is actually expected to change its rates from 1.25% to 1%, while the Bank of England isn't actually expected to change its rates. On Friday, we have the US trade balance, which will be quite interesting to watch, we'll be able to see whether the US economy is actually picking up any momentum and recovering from its downturn. While on Monday we have the UK CPI, again we're expecting quite a high value, around 5% in UK inflation, as well as the German ZU Business Confidence Index on the same day. Now again, Germany being the biggest country in the Eurozone, it will be quite closely watched as to how they are coping with the crisis so far. In terms of client activity, many of our clients have been buying into the rally we've had over the last week or so, believing that it could actually possibly go higher. We've had a lot of positive news coming out of both the number of governments as well as central banks, and they're helping prop up the equity markets. The clients also continue to hold on to long gold and silver positions they've held for very long periods of time, and just recently they are now starting to go short dollar Swiss. In terms of theme of the week, I would say the theme of the week would be very much the EU summit that we will be having starting tomorrow. Now, many people are saying that the EU summit will be quite a defining meeting for the euro as a currency. Some people are speculating that it could lead to a two-tier Europe, or even as a worst-case scenario, if nothing is resolved, a dissolution of the euro as a currency in its current form. There is a lot of uncertainty and unanswered questions at the moment, so it is very much a case of waiting and seeing what is actually announced before reacting. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.